Good day, viewers. Welcome back to our channel. Welcome back to Humble Traders. Today is Sunday. Markets are still safe for the cryptocurrency markets, and we once again have the opportunity to go back to our charts and try to review what we did throughout last week. This video is inspired by something that I noticed going um, on the videos that you find on YouTube. Most of the trading videos, I was going through some comments, and I realized that there are comments saying that why won't these people show their strategies live as they take the trades, so that at least you would see how what they preach works, that they can take any indicator on backtest with it and get amazing results, but practicing it live is what actually makes it uh, something worthwhile doing. So I was like, oh, then why not we do it that way on this new channel that we are trying to build with our audience. The only thing we want you to do is to keep supporting us, because here on this channel, we don't, like I said in the maiden video, we don't just come and show you how to trade. We show you what we are doing also. We have a demo account. We also have a real account. And that's what I feel to do differently from most things happening in the YouTube content that I usually see. I've been in the markets for quite a while, and I've seen that it's either you see backtesting videos, and then or you see other kinds of videos that actually give you the feeling that you can do this, but when you go to the charts to actually practice it live, you find that you are getting different results. Whatever you see being done live, is that thing keeps itself glued at the back of your mind, and you find out you're always remembering it, how it happened, and you can find it easy, you find it easier to replicate what you actually saw, on your screens. So this is why we built up the concept of okay, in this channel we are going to continue showing people live trades and also demo trades, so that you can see how the strategy we are preaching here works. The strategy here is the SIWA strategy, and believe me, this strategy is powerful. You can just take it. Once you do what you are seeing on my screen, whatever I do on my screen, once you see it, you find that you are able to replicate it on your own screen. And this is why I try as much as possible to zoom in and show you what's happening. And what I think I'll be doing right now is just to try to work by that comment that I read, and I've seen several comments in that direction. They go to a very successful YouTube channel, and then while you are getting good comments, you also see comments like this coming in, and then we easily ignore them. But there are things that we should pay attention to, because that's what will make a difference. So I want to try and coming week, this week that market opens in a couple of hours, so I want to use this strategy that I'm preaching here. Go to an instrument, do it the way I always preach it here, and then we're not back testing, because back testing videos are coming. Like I said, they are actually coming. But what we are going to do is, instead of doing the back testing this week, let's forward test. We will do the forward testing. We will place the trade live, whether on demo or real account, and then we'll leave it, let it go. But before I do that, I'm using this video to tell you what I'm about to do, and also tell you what I intend to do when the market opens, and then how I intend to do it. So let's go to any chart. Let's go to any chart that we have been talking about. And then look how Bitcoin, oh my God, Bitcoin just keeps shooting up. It's now about 79,000, almost 70, almost $80,000. Wow, there is something in this market. We just need to double down on the work we are doing, and then success is sure by God's grace. Now let's just not deviate from what we are doing this morning. Let's go to the same chart of USD JPY, because like I said, avoid too many pairs, avoid analyzing too many pairs. The only way you succeed is when you analyze fewer pairs. You want to know how this works, you want to know how that works, using the concept you are studying. Once you start recording results, then you can actually consider more pairs. But for us here on the channel, what we do, we just take USD JPY, which is a dollar kind of is a dollar currency, a dollar pair. Then we can take USD card, USD JPY. Those ones come under USD CHF, sorry. Those ones already come under what? USD JPY. And then on the one side here, we can cut across the market and go to metals, like we have gold topping the chart, then we have palladium and platinum. That one is another group B. Then we go to the group C, where we go to the cryptocurrency markets. So you can see in this channel, we have a strategy that we intend to use across all market conditions, all market systems and trading conditions. So this is what I believe makes the channel unique. And we don't intend to keep analyzing or keep telling you this is how you do it when we're just telling you demo kind of success. No, we want it to be real success. We want you to see it real happening before your eyes on your screens, because you're going to even hear the sound of, the sign of that order as you place it in the market, using the same strategy that we have been placing. Because I believe some other people may be looking at it like, okay, this is just merely indicators you are placing on the screen. So what happens? It's not the same indicator I've been using over the years and I have not recorded any success. No, it's not the same. The settings here are different. They have been tested and tested all over and over again. And then we are also bringing it to the public. That is what makes it even more solid, because we are not hiding anything about it. We are bringing it here to where people are. There are eyes watching. Let them see it with us as it unravels. So this is part of what inspired this video today. And so we are going to go and since we want to do this market on market open, we want to actually go back to our USD JPY. Let's start with it. Let's zoom in and see what is happening. Like I said, we have a strategy that we are explaining here. I want to place it and leave it, let it go. Let us see what it gives us with you, together with you, as you watch with us. So let us actually go to the monthly and see what is happening here. Look at it. Look at it. On the monthly, what we are seeing is there is an uptrend already in play following the SIWA strategy. We said if you are looking at an uptrend, first you need to know that price is supported by all the EMAs. The EMAs are below it and price is above them. And this is what we are seeing here. That is in layman's language. But if you want me to use the Forex terms, then you need to see lower and lows and higher lows for an option, or highs and higher highs. Like here you can see here, this is a low, this is a higher low, this is another. This low actually came attempted to break this low, but you can see it's only with a wick. So by my own understanding, and I believe that there is no volume here, so the body still remains above this low, so it's also a higher low to me. But there is this situation that you have to consider happening here. Like it's posting another kind of bullish structure, because the middle low is not as low as either of the lows that I'm pointing to you using this crosshair. So you can see on the high, you can see this is a high. This one also is not a higher, is something like a higher high. It's not a higher, actually it's not a higher high until you consider only the body of the candles like this. This is why we hardly use the wick in the kind of trading, the smart money concepts that I have learned over the years. You usually use the body, and here you are. Now this is a higher high to this, and then if this is also a higher high to this. So you have a mature uptrend in place. Look at it, even right from here, you can see. But what about here? You can see this place is a downtrend. It's a downtrend because you can see the high here, then a lower high, another lower high like that, all to this point. Then if you consider the lower side also, you have a low, you have a lower low, you have a lower low like that. So this one is the perfect scenario for a downtrend. And even if you use a trend line, for example, you want to see it, you can see it like this. You can pick another trend line and place it here. You can see what you're having is you're having price held in a downtrend. Look at it, it's tilted downwards, isn't it? Look at it very well. You can see, look at it, it's actually tilted downwards. But what about if you have an uptrend then? If you have an uptrend, you can easily know that by the direction of your trend line. Look at it. Place it so that you understand better what we are preaching. You can see, look at the trend line. You can even make some adjustments after you have drawn it to make sure it supports price. See, like so. You can see it's an ascending trend line. You can see it's showing you that price is on its way up. So that's one way of at least knowing what you are doing, that you are in an uptrend or in a downtrend. And another way is by looking at your EMAs. Look at your EMAs, the way they are actually supporting price. Look at it. Look at where price is above them, and look at the first EMA is also it graphs price like this, in this manner, supporting price. Even though it breaks it here, look at how it breaks it here, trying to touch the next EMA due to the deepness. This happens due to the deepness of pullbacks. Now look at it. After then, the second one supports it, is on its way up. If a downtrend were to set in, then you will see that price will completely pass all this, and form something like a swing high here like this and continue down. But you can see how they completely totally support it. And the reason why we are having this gray EMA here is to show us the direction of the overall trend. And if you can see, it's up. It's actually up. It's showing upwards. Look at how they are stacking and pointing at the same direction. Before price comes here, if price ever touches this place, then it means a downtrend, and it's happening on the monthly, then we already have a downtrend that is too too intense. So you can see for this trading system, we now came, and after the study we now realize that okay, we can subject some couple of EMAs to study and see how the results turn out. So we ended up picking these 3 EMAs you are seeing, 3 or 4 EMAs you are seeing. Like you have the 9 period EMA, the 21 period EMA, and then you have the 40 period EMA. Then the last one is the 200 EMA. If you have this displayed on your screen like this, and each EMA serves to tell you what price is doing on any particular time frame you are looking at it, considering the number of candles. Look at it now. The 9 EMA monitors the average price of 9 candles on the monthly time frame. Now the 21 period EMA takes care of 21 previous candles, what they are doing, and then displays a line to show you that okay, they have been trading within this range and they have not passed this range. Excuse me. Then if you look at the 40 is taking care of 40 candles, the average price of 40 candles, and so on and so forth. This is what the EMAs are doing. And exponential moving averages is what EMA means. Just like you have the simple moving averages. If I should replace these settings with simple at that place where you see the indicators, for example, if I go and as if I want to place another indicator like this, if I should replace this particular point where you see exponential, if I should replace it with simple, then you find that you are seeing a different kind of reaction to price, because this time the EMAs will be smoother. They will be smoother because the exponential that we are using reacts more to price. So no matter how price reacts, you will see it will bend towards that so that it can capture the movement of price. So we also have other kinds of moving averages like the weighted moving averages, but we're not using them. We are simply using the exponential moving averages because of its sensitivity to price. I have not tested using like the weighted EMAs and all, but I am choosing to use the exponential because it has already given me good results. So we can also subject other types of EMAs. You can try the simple EMA and see the kind of result you may come up with. But please, always, whatever strategy you want to put to test, make sure you use a demo account. No matter how this strategy is potent, no matter how it's working, I cannot come and tell you to what, go and do it in a real account, because I am not your financial advisor. I am only here to educate you on what I already know and see happening real life on my screen, and then encourage you to go and do the same in your own MetaTrader or whatever platform you are using. For me, I use both the I use the web I use the web browsers. I mean web trading platform. I also use the, because I'm almost always my mobile phone. So I decided to master the use of mobile phones in trading. So you can see that's what EMAs are showing you. And this system of SIWA is made up of the EMAs. And then if you look down on this screen, you are seeing the word. You are seeing other indicators like three of them. The the MFI indicator, which is the word money flow index. This one will also, it works with volume and price and tell you what is about to do at a particular point in time. So you need to pay attention to what is happening to your indicators down the screen, and at a point where you are about to maybe form a trading bias for that particular period. So you can see we have the MFI here. We also have the OBV that is here, that is the unbalanced volume. These are volume indicators. I chose to use these volume indicators because market is about the number of orders that come in. With the volume of orders, that is the amount of orders that are trooping into the market at a particular point in time. Now these indicators will serve to consider the number and then show you will be seeing by the display of digital numbers on your screen whether there is high volume, there is low volume, or whatever that is happening in the market that your eyes cannot see. They serve to guide you. Then we have a third one, which is the average true range indicator. This average true range indicator measures volatility. It serves us a lot of purposes here. At the beginning of this channel, I was quite completely silent about the ATR indicator, but that's just because I want us to first of all get used to the strategy. But you can use this ATR indicator in a number of ways. It's a valuable indicator on your screen, and if you can master the use of it, in fact, you hardly get what stopped out. And one popular use that we have been advocating on this platform is to use it in placing your stop loss. So you can see we have the system ready. If you can make your screen look like this, and the setting for the MFI, the OBV, and ATR are all set to 14 period. You can see on your screen right now. So just leave them at their default setting and then place them on your screen, and then you are good to go. Now, because of what I saw the comments online that I saw. The person was trying to talk about the average true range and how to use it to set stop loss. Then I said, oh, I have been using it to set stop losses on my channel, but maybe I haven't stressed it out for people to actually understand what I was saying. So now we are going to plan a trade before market opens. When market opens, we are just going to come and select a good position to enter based on our trading system. Like I said, if you don't know how to use this trading system, you can lose money. But if you align yourself with what you are seeing on your charts, which is if you know what the candles are telling you, that are based on your trading system, because you can see your EMAs that are there to react to the price, and the price is also telling you something. If you understand what it is telling you and you do and act accordingly, you hardly lose money with this trading system. Look at it. I told you that you need to see a close. First of all, if you are looking for a trade setup and you want to be looking at an uptrend. Maybe you just came across this chart and you feel you want to study it so that you can form a trade bias, a bias of where the price may likely head to next. And then you just come across this and you have your trading system already on your charts. The next thing you just notice, has there been any down move recently? Okay, and we can see it clearly here. You can see another one here, and what happened after that? You can see it's a massive push to the upside. But don't forget, we are looking at the monthly time frame here, please, because on this channel we are teaching you even multi time frame analysis, which is one of the most difficult aspects of trading that most traders are actually grappling to understand up till now. Because even if they preach or tell you this is what this time frame is doing, and you go to your charts, you may see it is happening in a different way. So that's why we are using this same strategy, and to bring in the multi-time frame analysis. That's what we've preached right from the beginning, saying that we are going to explain how to move from one time frame to another and still relate among the time frames. You are not going to say, okay, I just move in just to find entry. No, as you are moving, you are trying to read what is happening based on what you saw on the higher time frame. As you move to the lower time frame, this is what it results to, and this is what it means. So now, since we are looking at the monthly time frame, we have a close already above the, okay, the fall we are looking for. We had a massive fall already, and then we saw how price now came and almost touched the 40 EMA here, and showing some rejection to the upside. As this rejection is happening, many people have already got money on lower time frame, but because this is monthly, you can see this is monthly. Let's try something. Let's first of all place horizontal lines even from the low of this candle to where the body reached here, and then place another one at the low of it. Okay, then we are going to move to the lower time frame. Don't be confused. We haven't said anything concerning. I just wanted to show you what a tiny move on the higher time frame can amount to on lower time frame. So let's move to the weekly chart. Look at it. That's the lowest of that monthly candle here, and here this is the where you saw the beginning of the body of the candle was at on the monthly. So that's where this candle, that's the close of the candle, and this is what the low of the candle. Or is that not so? Look at it. The open, no, the close of the candle, because it's a bearish candle. The bearish candle will open, travel high to the highest point, come and create a low, and then start pulling back to close towards the downside like this. Unlike a bullish candle where it opens, then travels down, it goes down, then shoots up to wherever it's going, maybe create a highest point like here where you see the wick here, then close somewhere more comfortable, depends on what is happening in the market. The same thing with but in the case of a bearish candle, you can see a candle would open. If it's bearish, it will first of all go up as if it's taking you up, then it will go down to create the lowest of low, then it now look for a comfortable price to close at. This now what we are looking at with our higher red horizontal line is pointing to the close, which is about the same place that this last month's candle opened at. The close of the previous 3 months is the open of the last 2 months candle. You can see where we placed that horizontal line. So it's a very important point. If you drop to weekly, look what is showing you. Okay, go to the daily, you can see the range will be increasing. Go to the 4 hourly time frame. So for traders trading on lower time frame, they have already caught some handsome amount, even from here to here already. Because let's take and try to see how many pips are here. Okay, this about 422 pips. Okay, about 422 pips. It's not a joke. If you had caught this move from here to here alone, you would have already eaten like 421 pips. So you see, it's a massive kind of move, especially if you have, it depends on your lot size anyway. So if you have the bigger your lot size, the more the profit. Look at 1 hour, look at how it's increasing. It's the same position. Look at how it shows you as it has created a clear head and shoulder, inverted head and shoulder kind of pattern here. So this is how you actually move from lower time frames, from higher time frames to lower time frame. And then traders that are day traders, short-term traders, they must have eaten well from that move where your own move where you're looking at has not yet begun. So as we are doing this video, you should already be assessing yourself to know what kind of trader you want to be. So having said that, let's return back to our analysis of that monthly candle uh, following our trading system. Now look at it. We have a close above the blue EMA. That is the first signal we have seen. So now the next rule says we need to what? The next rule says that we need to see a defined close above at least one of the EMAs. But you see the massive move that we saw here on monthly necessitates a pullback. It necessitates a pullback. Look at it. If price moves in either direction with this kind of volume, then there is need for a pullback. Or if it breaks an EMA, it needs to pull back. And that's what we are seeing here. And for a bullish candle, once it opened, look at it, it came down into the body of this monthly candle. But you can see the kind of volume on this candle. The kind of volume on this candle did not allow this candle here to what? To move down, because price is eager to be on its way up. That's why it's a shallow kind of retracement. Let's place a horizontal line there also. Look at it. That's the only place it went to in the monthly on the monthly chart, and then it shows signs of returning back to the upside. But does weekly agree? Does weekly agree? Let's go there and see. Look at it. Weekly is also showing 2 weeks of what? Retracement. Look at it. What happened when that monthly candle opened? Look at the amount of retracement that this week, that was last week. After it had broken the high of last 2 weeks, it also retraced back downwards. Okay, and that's what we saw on that monthly. Okay, you can still use the Fibonacci tool, like I said, to know what level of retracement is that. And if you have been following our videos, which I will find time to attach the links to all the videos that we post, so that each time you are watching any content, you can easily get the link down below of the same video. You don't need to go looking for another video separately. So look at it. If you learn how to place your Fibonacci, you do that, you will see that this is around the 38.2 of the weekly candle, this weekly candle that shows a volume. This retracement came to the 32.8% of it, and we all know that 38.2% is a strong Fibonacci level. Then let's drop to the daily chart. That small move that you saw on weekly, okay, that small move that you saw is not small, because on your daily it is showing you what? 2 weeks of fall in price. This doji you are seeing, this red doji, created a massive red candle on the daily, and this very week too we also had what? A continuation down, up to even below the previous week. Then now we are seeing what? Signs of what? Going back to the upside. See what happened. This candle came, that last candle, it came, the moment it opened, it rushed and broke the low of this last week, the previous 2 weeks candle. It broke the low of that candle, and then it went as high as this level, okay, higher than the last 2 weeks candle. Then started falling again. It started falling again until it closed around here, below the low, below the closing price of last week's candle again. This is what actually happening on this weekly chart. So having seen that, we saw that price struggled with resuming uptrend, but in the end it gave way to the best, and price actually fell to even below last week's low, and then retraced back, but not up to the close of last 2 weeks close. Okay, so now don't allow that to complicate matters for you. I am only trying to say what I'm saying using words. So let's now move to our daily to see what the fall amounted to. You can see on this chart, every day posts a new candle. So every day, you see, you need to have 4 candles here that will give you 1 week of trading, as we saw in the previous chart. Look at it. 1, 2, 3, 4. Okay, five candles, sorry, 5. So these are the 5 candles. These are the 5 candles that you are seeing, which constitutes last week's trading. Let's place some horizontal lines there, or vertical line this time, to use in demarcating the number of candles that actually happened, okay, last week. You should see that this looks like one candle on the weekly. Let's confirm that. See, you only see one horizontal line. It means all those 5 candles that we marked on the daily all are represented by only one candle on the weekly. So you can see, if you are a long-term trader who only looks for signals on the higher time frame, you stand to gain huge tips, as if they won't stop. But then you must be careful at your position there, because look at it, just dropping to the daily. Look at what has transpired. Price came down. Price just continued down from previous 2 weeks. It just continued down. It continued down, and then came to the level of the 21 EMA, and is showing signs of rallying back. That's when Trump was announced the winner of United States of America presidency, and then look at the massive move we had down. Now, if you are a trader that is used to looking at charts, you would have expected some pullback because of the volume that this candle went with. And I told you last week was full of some important events. There was also rate cut at the United States of America. Uh, uh, what do you call them? The banks, the central banks. They had they cut down the rates because of the kind of strength that the dollar is showing, which will actually have both positive and negative effect to the economy of America. So they had to cut down the rate a bit to at least reduce that kind of uh, export deficiency that the strength in dollar may actually cause. So you can see that happened also last week at about the same time Trump was announced president. Now look at this. After that push to the upside, now rate cut caused that deep move to the downside, and then to us we'll be seeing that we already expect that after price moves strongly to the upside, we expect any kind of retracement. Now this coincided with what? The rate cut, and then price has already as at last week, price already came up to what level? let's see, it came to the level, it came up, it actually retraced up to the 70.5, shy of a few pips. So you can see this region is already a bullish region of in Fibonacci science. So you can see it retraced to more than half of the bullish candle, and this region is already bullish. So we marked it, we can mark it and keep studying to see what happens even on lower time frames. Let's take away this fib tool to make our charts cleaner. And so now we are here on the 4-hour chart, and we have marked that level. So here is where we begin to stock entries. We said before that the system guides us that even after you have a close above the one of the EMAs, you still expect a retracement back to the what? That same EMA that it broke. Then from there, you also look for to see whether one of the EMAs will still reclaim price, then you can enter. So you can see you still have to wait. That's what the W in SIWA means. Study, investigate. That investigation is that multi-time frame analysis that we have been doing from the monthly chart down to the 4-hour chart, which is our time frame of entry. We usually want to open, because we are just short-term traders, we just want to open orders on 4-hour so that we can go ahead and do other things. We have other primary jobs, we can attend to them and then come back to our charts to see what is happening at whenever we have we can make out a little time to do so. So you can see, even if you want to consider what's happening on the 4-hourly, look at it here. We are only waiting for confirmation because we already had an entry long ago. Look at the entry here where it broke above the EMAs, but you can see the way that it broke all 3 EMAs at once with such a volume, you expect deep retracement. You expect deep retracement. If you had only broken the 9 EMA, which is the lightest, then there will be only a shallow kind of retracement. But look at it, it broke the 9, the 21, and even the 40 EMA, forcing that bullish scenario to that bearish scenario to turn bullish, because price was previously what, in a downtrend here. But look at it, this move up here caused all the indicators to change realignment, and then they realigned to a bullish position. So you can see now what we are having, we have an uptrend here which caused all the indicators to cross. Now we should expect a deep retracement, and that's what we are seeing right now. And we can take the Fibonacci assessment of this to see what's happening also on the 4-hourly chart. There is nothing we are hiding. We are not hiding. We are doing the same thing we would do even if your eyes are not watching. So this is the same thing we are still going to do. See that level that we dropped from the daily? We dropped that horizontal line at the daily. The position is still the same here between the 70 and 78 fib retracement levels. And look at it. It has done what we call return to order block. This one is another term using another strategy, which I won't bore you with. I only want you to be looking at your indicators, what they are doing. Now look at it. It has returned. If I were not using the indicators like the EMAs, at this point I would have made an entry just when price revisited and created this bullish move here. That would be my entry. Or if I even trust it, the moment I see this red candle drop here out into this region and I measure, I see that it has closed a gap, I will just open my buy order and then I will already be in this trade. But because we are not using naked trading, that one is what we call naked trading. If you want, we can be doing what? some videos to show, maybe a series to study naked trading on its on its own uh on its own segment. Like we want to do like a segment as part of this channel to only be showing setups in a naked, in actually a naked way, using purely candlesticks and what we can see painted on our screen. If you would like to see such videos, please let's see your comments in the comment section. That's the only way you encourage us to know what you want to see, and then we strive to bring it to you. So if you want to see such videos, let me see your comment in the comment section. I will reply by God's grace, and then we can begin to think of how to bring such videos to you. But since we are using EMAs here, look at it. We will not enter. We are waiting on the 4 hour to see what price close at least above the 9 EMA. That's what we are waiting to see on the 4 hour. But on the 1 hour, that's the beauty of time frames. On the 1 hour, we would have been in this trade by now, because when it returned a second time to this horizontal line, the line we drew on the right from the daily, that's the level of retracement. We can see when it came to the 1 hour, it already gave us an entry here when it went and broke above the red EMA, and we had a retracement here also. You must wait for that retracement. That is what the W means in SIWA. You need to trade with a lot of patience, so that when you finally execute your trade, you have the rest of mind to relax and watch it play out. So now if we were trading the 1 hour, this is it. We will just open our trade here at the point of retracement. We will open our trade here, and what do? We now calculate our stop loss. That's where ATR comes. We are giving you the whole package here. How do we calculate ATR? After pulling the trigger and entering this trade around here, then you just say, okay, let me look at ATR. What is this telling me here? It is showing 0.286 pips, not even up to 1 pip. So it's showing that there is no much volatility in this market, and we can just calculate using this amount that we are seeing, this number that we are seeing. So now we will say we have entered here, our trade is open here. Let me place a horizontal line there. This is our point of entry on the 1 hour time frame. We entered around 152.370. That is the lowest point of that candle. If you want to know the exact low, you just place your crosshair on that same candle of entry. Then you look at the top left part of your screen. You will see some numbers. The first one is the open, then the second one is high, the third one is low, okay, and the fourth one is close. So now you can see that low corresponds to the number that we're having at this horizontal line that we placed. The red horizontal line is showing 152.370. The same thing we are seeing at the top left of your screen is 152.4 and 0.370. It's the same thing. So that is the low. So after taking the reading, well, immediately after you open your trade, you just want to go and place your stop loss, because we must protect capital, isn't it? Even no matter how you backtest a strategy, you must still place your stop loss anytime you open a trade. The first thing you do is to go and safeguard capital by placing your stop loss. At what position do you want to place your stop loss? You just place it at a standard level using your ATR indicator. So that's what we're about to do now. We have noted our point of entry. I mean the lowest point of our, or the lowest reading that candle we entered at is showing. So we have noted this is 152.370. Now the reading on our indicator is 0.286. The next thing we do, we just go to our calculator and say, okay, 0.286. Let's look for a calculator. 0.286 times 1.5 is the multiplier factor of the ATR we always like to use. For highly volatile pairs, you can use 2 ATR. So that means this number will be multiplied by 2. But because we are using 1.5, we just multiply by 1.5, which gives us what? 0.4289. Then let's get the reading of the low of that candle. Then we subtract it, since it's for a buy position, so that we subtract it from this number. Let's just say minus. Let's look for the figure to subtract it from, and that is what? 152.370. Since that is the point of entry, then let's go back. 152.370, 152.370. So you can see you have subtracted that amount, even though we don't want to delete, because we always know whatever value we get here, we just ignore the negative sign, right? So that's what we are doing. So we have 151.941. That is exactly our place of stop loss. We just go to where we have our order, we just click and modify and write exactly 151.941, and then save it. You will see it will automatically appear at that position on the chart. So but for now, we will just go and place it with a horizontal line. 151.941, 151.941, 151.941. See, we can, because of those indicators, we are not able to see the number on the 1 hour time frame. We can just move to a higher time frame. I think this is about the, you can see it here, 151.941. So it's just on that 78.6 Fibonacci retracement level. 78.6 Fibonacci retracement level. Look at it. That is, don't worry that it's not actually staying there. Look at it now, we have it. So we have placed our stop loss when we entered at that particular candle there. So what is left is for us to now allow our trade to play out. And this is what I intend to do on market open. At market open, this is what I intend to do as a form of forward testing this strategy openly with everyone watching, and make a video while I do that, so that it will serve to show the potency of this strategy and the need to double down effort in trying to crack all the crackables concerning this strategy, so that we begin to make money as we continue trading the financial market. You can see our level of stop loss is 151.941, which is way below this swing low, isn't it? So it means that we have placed a standard. We can even use 180R, but that means it will shift a bit higher and closer to the swing low. But I like to use 1.580R. So I once opened a trade with a $2 in my account. I placed a 1.5 ATR, but the trade was open on 15 minutes. I went and slept off. I was going through my charts and I slept off. In the morning, I woke up to about $18 in profit, because after the series of pullback it did, because we were lucky that we already did our analysis from the higher time frame. Immediately I just came to my account, I saw $18. It means after it had pulled back to wherever it was comfortable with, then it now took off with me in the trade. So you can see placing stop loss using ATR is a very big thing in your trading career that you must learn how to do. And it's not difficult, isn't it? Look at it, you have placed it already as if we are set in this trade. If these markets were moving, then the next thing left for us is to continue studying what will happen to this our order. We already have a live order uh going in this direction. We placed it, I think we entered almost at that region or a bit higher, because it depends, or lower even, because it depends on the time frame of entry. We are just going to keep it open, but I don't think I used a standard ATR level for the stop loss. But at market open, I shall try and place that ATR at a strategic position so that we continue moving with the trade to see where it takes us, and also have a position in gold too after doing such analysis. So this is it about this strategy. The ATR indicator is very valuable in helping you place a standard stop loss on any time frame that you are looking at when you place an order. This will depend on the instruments that you are trading. It will depend on the instruments that you are trading. If you are trading gold, the numbers you'll be seeing will definitely be different, and the volatility will also be different, because like I said, these are driven by different market forces. Your own is study hard and know how to place your orders and allow your orders to play out. So that being said, I think we already have an agreement with you, or I already made a proposition that I'm going to do this at market open, because I believe maybe viewers want to see such videos more. Not just come and show you the blue pips, but show you how it happened and where we started from, where it all started from. And that's what we have done, working you from what monthly to even the 1 hour chart here. So you can see the importance of multi-time frame analysis. What if you just saw that blue close above the that close above the what do you call that close above the 9 EMA on the monthly, and you just come and pull the trigger immediately? If you had pulled the trigger, you would have to absorb all the shock of that fall. The shock of that fall from here up to here, you have to absorb it, because it is when you absorb it, finally the trade will start playing your way. But you must have what? You must have actually absorb too much shock and too much drawdown. This is the high of the previous month. This is a new high created before the what? The retracement, what you saw on the monthly time frame. So now our next target will be to go and break the high of this month, which is at that zero level. And we are going to continue monitoring how the trade plays out at market open. If you like what we are bringing to you as in form of valuable content, because we believe it is a valuable content, and if it resonates with you and you like what you are seeing on your screen in our analysis, please do well to drop us a like, subscribe to our channel, like our videos, and drop all your comments right in the comment section, and we shall all be there to rub minds together as we try to address your concerns. I shall from now on be linking so many things in the comment section, in the description section, so you can see links to our previous videos, and then you can all know how we started and where we find ourselves. It's just a new channel, and we are trying to rebalance properly as we move together, and that is where we need your support. We just need your support to keep urging us on, so that we continue bringing the best out of us and bringing it to the public arena. Because as for me, I don't intend to live that demo life that most traders like to portray online. I want to show you that if you see me eating money, and if you see me cruising, and you should know how I managed to cruise, how it came about. You saw when I cried, and you saw when I'm laughing. But with this strategy, the crying will be less. The crime will be less, because this is where there's this idea about Gen Z kind of way of looking for money. This SIWA strategy is Gen Z in itself. I'm telling you, if you like, you can see it that way. It is Gen Z in itself, because once everything aligns properly and you just open that trade, your own is just to go ahead and do other things, allow your trade to play out. You can see even on this 4 hourly, the MFI is still trying to play out, because you can see it's way below 50. That's what caused that heavy retracement you are seeing after that bullish candle opened at around the 31.61, at around the 70.5 Fibonacci level. But you can see the 1 hour, there is an improvement in MFI reading. Look at it, is above 50. It means the uptrend is gradually settling in. These things happen. We are always in a hurry, more in a hurry than the price, and price will not mind us. Even if you are in a hurry, it will continue to do its thing. If you like bring the money, it will continue to swallow it. But if you are tired of allowing it to swallow your money, then you have to open your eyes and ears and look at ways that you are going to cut down on that. Forever you cannot say you will not lose anything in this market, because some news will come even when you have everything lined up, just come and swallow it and go away, their way with it. But you can't do anything, but you can try to get your money back by what? Doing the right thing, and then you will see that everything is now moving back in the correct direction as you anticipated, and you will make all your losses back. So it is the kind of strategy that if you have, even if you are making losses, you are still not bothered, because you know that you just need to uh reorganize yourself and do the right thing, and then you will see that all your money will return even with profit. So let me leave you here as we wait for market to open, so that we can actually place our orders and watch what happens from there. Thank you very much for staying with us. Don't forget to like, share, and subscribe to our channel, and also comment at the comment section, so that we shall continue analyzing these things together. Thank you very much, and see you in the next one. Be safe.